Welcome everyone to Vested Interest. This is Shane. It is Monday, the start of a new week. Just a couple more days in February here, and we're on to March. It's the 27th. So we've got, well, actually just one more day of February tomorrow, and then on into March. The year is flying by. Hopefully you're having a great start to the year so far. I know we covered it not too long ago, but we are going to cover Johnson & Johnson again. It has really continued to pull back, so I wanted to touch base on this one. It was also requested by one of the subscribers to the channel, so I always try to put out videos that you all want to watch. Hopefully you get some value out of this one, and hopefully those of you who have not checked out Johnson & Johnson for a while can get a quick overview of the company. Let's jump right in. They are out of the healthcare sector. And if you want to know more about them, check them out, www.jnj.com. That is their homepage where I pulled this information from. About Johnson & Johnson, we believe good health is the foundation of vibrant lives, thriving communities, and forward progress. That's why for more than 135 years, yes, you heard that right, 135 years. So this is a company that has survived the downturns throughout the years, right? The Great Depression, the Great Recession we had in 2008, housing crisis, the dot-com bubble, 70s gas runs, you name it, go throughout history. It seems like every decade we have a crisis in America, and the stock market drops significantly, but they've made it out the other side. They keep pumping out the dividends, so I'm going to continue to invest in them whenever I find value, and that's what we're trying to see here if we do see value in this company now. Today, as the world's largest and most broadly based healthcare company, we are committed to using our reach and size for good. We strive to improve access and affordability, create healthier communities, and put a healthy mind, body, and environment within reach of everyone. Every day, our more than 140,000 employees across the world are blending heart, science, and ingenuity to profoundly change the trajectory of health for humanity. And they primarily are in three sectors here. They're in the healthcare sector, but primarily their business is broken down into three sectors: consumer health products, med tech, and pharmaceutical products. And one of the things you should be aware of is they are going to be doing a spinoff soon. And I believe what they are doing is they are spinning out the consumer health products portion. So that would leave the pharmaceutical products and med tech under one umbrella, while the consumer health products is spun out and will be its own company. So if you own them, you may want to do a little bit of research on that. I'm not exactly sure what the breakdown is going to be, how many shares you'll get of the two different companies based on how many shares you have. That was something I would look into, but be aware there is a spinoff coming. And another thing you should be aware of is they are currently facing a lawsuit for their Johnson & Johnson baby powder, talcum powder products. A lot of larger companies like this do over time, potentially face lawsuits. That's one of the risks of investing in a company like this. 3M, for example, is facing a lawsuit similarly. So there will be, I'm sure, a significant portion of their free cash flow that will go to paying back or paying out whatever that lawsuit ends up paying out the people who have been impacted by it. All right, so again, www.jnj.com. If you want to know more about them, check them out there. And now they were down on the day, not terribly down, but 0.22%. And we are talking about Johnson & Johnson, ticker J&J, out of the healthcare sector. But the reason I really wanted to look at them today is they are really up against their 52-week low. So they have 52-week low of $155.09, a 52-week high of $186.69, and obviously at $155.63, they are right up against that 52-week low. So it'd be like buying them at any time over the last year at this lowest point, right? Average volume 7.6 million. Today's volume was 5.2. Looks like a lot of selling. Actually looks like a lot of volatility, down a little bit further down than where they then they crept back up a little bit and then down and then settled out at 155.63. That's a lot of volatility for one day. Market cap of 405.306 billion. A beta of 0.54, so they are less volatile than the overall market. So this volatility is not normal for this company, right? It does look like they were up in the after hours a little bit, 0.16%, so maybe looking at a rebound. Usually whenever a stock hits their 52-week low, unless they drop right through it and drop like a rock, they usually bounce off that 52-week low and recover a bit, so we may be seeing the signs of that. PE ratio, price to earnings, is 23.16. This is one of those companies that's a little higher than I would typically like to be buying any company at, but I'll be honest, this one just never seems to have a low PE. It's always one that people seem to pay a premium for. It is AAA rated, one of the better companies out there as far as credit ratings. I think they are even rated higher than the United States government. So not a lot of companies have a higher credit rating than the government that prints money itself, but this is one of them. Earnings per share, EPS, is sitting at $6.72. Earnings date is coming up on April 18th. Forward dividend is $4.52 paid out in the year. They are a quarterly payer. We will see that here in a minute. And very nice dividend yield for this company. This is higher than their normal 2.9% dividend yield. Ex-dividend date was February 17th, so you just missed that one here about 10 days ago. So if you were to buy them now, you would not be in line for the next dividend. You would have to wait for the following. And the one-year target, at least according to Yahoo Finance, where I pulled this information, I am not affiliated, just one of the sources I like to look at. They have a one-year target estimate for $183.63 for the stock price. Now, I always recommend more than one source, so another one I like to look at is stockanalysis.com. And still looking at Johnson & Johnson, but they've had 25 stock analysts take a look at this, and they call it a consensus buy, right, with a low estimate of $169.69, which it currently sits lower than that now. So if it came back up to their lowest estimate, that would be a 9.08% increase in the stock price. On average price estimate of 187.3, so $187.30, that would be a 20.40% increase in the stock price. And if it happened to hit their high of $225.75, that would be a 45.12% increase. And if you were to buy them now, like I said, you would be locked into that 2.9% dividend yield. Now, I am long Johnson & Johnson. I do have 66.005 shares, right? Currently at $155.63. My cost basis is $164.79. So I have been buying as it has been dipping, bringing that cost basis down, bringing that dividend yield up, and increasing my potential future returns. And I love to see a stock that I own in the negative, right? If nothing has changed with the fundamentals of the company, which this one maybe you could argue that some of the fundamentals have changed since they are facing a lawsuit. That maybe has impacted the stock price a little bit, but overall they've actually faced lawsuits in the past. They always rebound. Like I said, 135 years, company's been around that long. And provide as many products as they do, they're probably going to get sued over the course of time, right? People have sued for all sorts of things. I mean, a woman sued, I remember years ago, for spilling hot coffee on herself because the coffee was hot, and who doesn't know that coffee isn't hot, right? So we are in that type of society, so don't let that dissuade you, or you may not be, or the stock market and buying companies, shares in companies might not be for you, because like I said, if a company's in business long enough, they're probably going to face a lawsuit. So I am down 5.64% on this position, in the red, $604.80. My overall position is worth $10,272.36. I have $10,877 into the position. Like I mentioned before, they are a quarterly payer. They do pay out $1.13 per share per quarter. Payout ratio is 65.20. I like anything below 75%. Although if it's a REIT or a limited partnership or something along those lines, I don't mind it being a little bit higher, because those companies, REITs specifically, they are required to pay out more by law of their free cash flow to their dividend holders. Dividend growth is very nice at 6.6%, right? For being 135 years and having a 65% payout ratio, that's pretty decent dividend growth, and a 2.9% dividend yield, as we saw before. Again, record date was February 21st, and their payout date will be March 7th. Well, that is Johnson & Johnson. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button down there below. Join me on this journey to financial freedom. Hopefully you are on your own journey as well. And if you are not on your own journey and have not started your own brokerage account, there is a Webull link down below as well. If you use that link, sign up for a brokerage account with Webull, you'll get some free stocks. I'll get some free stocks. It is a way to help out the channel. But like I said, hitting that thumbs up, right, thumbs up, subscribing to the channel, ringing that notification bell helps out as well as dropping a comment. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, and suggestions for future topics. So go ahead and drop them all down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can as well need to never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek advice counsel by a certified financial advisor.